Good morning, patrons and subscribers. Hope you're doing well. We'll start with the dollar yen and we'll go to our normal majors and we'll look at gold as well. So we're a little bit sideways on UJ. We did fall fairly heavily yesterday. We did breach daily pivot, and of course we covered those losses. And the nutshell, the summary from the FOMC minutes was that all members wanted a hike at the next meeting, but only a few wanted a 50 basis point hike. So it could have been more hawkish, where the statement said most members wanted a hike, a 50 basis point hike, but the actual message was that a few members wanted the 50 basis point hike. So it could have been more hawkish. But however, since they all wanted a hike, that in itself is fairly hawkish, but it could have been more hawkish, if you know what I mean. So it's pretty much set in. We're going to have a 25 basis point hike guaranteed for the next meeting, but there's a 24% chance of a 50 basis point hike for the next meeting. So that has increased from yesterday. Okay, so just bear that in mind. And so we're a little bit sideways, but what I was thinking, what you could do, weekly open, you target SLC, it's a 100 pip move. We've done that already. So on the short term view, weekly open, target the stop loss cluster, medium term view, ATR target long, ATR target short. So you could probably argue we've done like the move on UJ, from a stop loss cluster perspective, and we're probably just going sideways looking for direction. The one below is larger as well, you do know. Very, very naughty. It just went to probe those stops, and it didn't take hardly any time at all in order to get those stops. It really did pump. And then once we took that stop, you can see the reaction on price. Might need to zoom in perhaps. Where are we? Let's zoom out. That was confusing. Here. Right, yeah. Okay. Oh, right, yeah, of course. So we pumped. Huge pump. No doubt they pumped the ATR, the volatility, so that would increase the fear. Took out that stop. Big change, reversal. And we just chopped and gone sideways. So got to be careful, and also remember to check your yields as well. If the 10-year yield is positive, then it's going to help the dollar yen. All right, so keep an eye on the 10-year. That's just a little tip there. Oh, it does that sometimes. Oh my god. I need to format my computer properly. So we'll zoom out again. So that's the dollar yen. So you could probably argue it's done the move. It's taken out the stop loss cluster, and we're probably just going sideways looking for direction. If the 10-year continues to pump, which it is positive, then we'll come up and get that one, 135.25. Okay, and so that's UJ. Let's look at gold. Gold. Of course, if the yield's pumped, it's going to push gold down. Okay, so it's definitely worth noting that correlation. The profitable traders are long, but we might get an interchange. We had a buy-in volume here, but it looks like we're ignoring that. It might be that the hourly isn't the best time frame for this, because you see what happened. We had buy-in pressure, we come up, and this we just sort of fell again. Now we've got another one here, and we're falling. The trouble is the yields are rising, so it's going to put pressure on this. We are a seller at the big picture as well. It's worth noting. One above is 1845. And below 1818, so you can use that as an entry, or look for that for your TP. You can place an order to buy, or a TP in order to exit your short. I'm not sure if we'll get down there because we've got this bullish institutional volume here, and we definitely that was the largest candle. There was a large one here, but it looks like we ignored it. So I wonder whether or not the hourly might not be the best one for the better volumes. We can look at H4 maybe. So it seems that we ignored that one here, didn't we? If you remember, we fell anyway. So it's quite tricky. So we've been supported here technically 1822, and we know that 1822 is important because it's your support on the H4. It's 1828 today. 1822 is where the stop loss cluster is. So 1828 needs to hold, and we're currently breaking. Yeah, we're just below. So technically speaking, fairly bearish, and we're probably going to get that stop loss cluster. So be careful. I think UJ is probably going to get the one above, so it makes sense that gold would probably get the one below, because obviously there's a correlation there. Yeah, so I think that's possibly a scenario. Dollar Swiss, probably up, I guess. Yeah, we're going to get that stop loss cluster. The reason for it, you can see, it's really clear why they've got their stops there, and it's just horrible, isn't it? And once it gets that stop, I bet we do that. It's horrible. 93330, and one below is really far away at 90.50. So I think this is a likely scenario, and we've got the 8-hour target long as well. So if we do get that stop loss cluster, and then if we breach above and we go below, use that as a stop loss, 93.45, and you could have a nice tight stop to target weekly open. It's something like that. That could be a scenario. Liquidity probe, technical resistance, and we've got the MR1 there as well. So we've got a double confluence resistance, and then look for a short, and that could be a stop loss. You wait 10, 20 pips or so, then that could be a stop loss. So that's probably what's going to happen. So yeah, that's what I think. We'll have to compare this tomorrow, but that's what I think is going to happen. Up, hit that, down. So I'm not sure if it's worth watching dollar CAD because it's really choppy. It was really horrible to look at last week. It was just doing that last week. That's horrible. But we did break that range. The one above is at 135.70, 135.08. There's your MR1, 135.60. So there's your weekly open. We took out some stops. You can see those blue marks there. Hits that, falls. Hits that, falls. Hits that, falls. So it's probably going to have to do it again. It's really horrible. It's teaching you almost to not have stops, and then therefore that's how they eat you up and they consume you. They completely wipe you out, because if you don't have stops, then you're going to blow your account inevitably, unless of course you're using the correct sizing and you're using like micro lots. But what it's saying is that if you use your stop, if you use stop losses, we're going to reverse price, and it's going to make you feel really horrible. And you think, why did I have a stop loss there? Maybe I'll just remove my stops next time, and then that's where they get you. So it's really horrible. So it's just like stop hunt, reversal, stop hunt, reversal, stop hunt, reversal. One there as well. So it's just horrible, isn't it? But you do need to use the stops. But if you're thinking about having really wide stops, just really reduce the size. So as for this one, perhaps this one's closer, so we can maybe get that one. We're not that far away, 13 pips away. So it could be that scenario where it takes that and then reverses, takes that one, then reverses, then it just does that chop, and it just wipes people out, and it's really soul destroying and horrible. But just I think as long as you are in profit and you move your stop, just at entry. If you get a reversal, then you're out of profit. But you do want to be using your stop loss clusters, because you can see what happens. Comes up to take that liquidity, falls, liquidity, falls. So if you can have an eye on the SLC, then you know it's where you can TP. NU might be quite good because of the bubble. No, it's the sideways and choppy. There's MS1, so stop loss cluster there is large at 62.50, and one below is at 61.85. I was saying that potentially you could look for a long above the support, but we're just using that as a resistance currently. I think what's going to happen is that dollar crosses are going to take stops, and then we're going to see a reversal. So I think that's what's probably going to happen. Inevitably, this is going to climb higher if we look at the bubbles. That's if they don't reverse, which is kind of annoying if they did. But there's the Kiwi there, so it's strong buy. So I think inevitably we're going to break MS1. So their level of note there is 62.43, okay? And look for longs above that. But you can see we did probe it many times. We didn't get enough strength to climb above. The SLC is close, so it might want the stop loss cluster to be further away if we were going to rally. because there's not much point rallying now if it's just going to hit that. It's just going to fall. So it might do this, wait for this to get larger and higher, and then it will do probe and then fall. So it's really cruel and horrible, isn't it? It's just the stop loss cluster probe and reversal. AU and then EU. It's just really horrible and cruel. One above is large, 69.25, and the one below is at 67.90. So I think, you know, there and then that scenario, isn't it? It's close. And if you do breach the HR target short at 67.69, then you look for longs. So I think it's going to come down, probably hit that and reverse. So it's going to do the opposite of dollar Swiss, where dollar Swiss is going to come up, take stops, hit resistance, and then down. This is going to come down, take stops, hit support, then up. Okay, so we'll have to see how this goes tomorrow when we look at this video tomorrow. And then lastly, EU. And then I'm still going to be busy today. Need to do house hunting again. I didn't get to see a house yesterday, but I need to be actively looking for houses. 106.40 and 105.95, and they're both fairly the same, similar in size. I think probably here, this, then a bounce to take the SLC. So 1, 2, 3, and then it'd just be horrible. So how far are we? 33 pips. And then that's probably what's going to happen. Liquidity probe, technical support, bounce, take stop loss cluster above, because by that time when we come down here, that's going to be larger and it'll be higher up as well. So therefore then we'll have a target to aim to. And that's how it works, okay? So it's just basically liquidity probes, so be really careful. And what it does teach you to not have stops, but you do need to use them because you'll inevitably, you'll blow your account. Unless, of course, you're using like tiny micro lots and your account size is large, and then you can accommodate having a very wide stop or no stop at all. But I would recommend having an emergency break anyway, just in case something goes, something happens. Like when Putin invaded Ukraine, I had lots of dollar positions where I was bearish on the dollar, and I didn't have stops on some of those particular pairs. And that account blew up, and it was really painful. I had a USD ruble, and of course that's the Russian currency, isn't it? And that absolutely went parabolic. So you've got to remember, you've got to have an emergency break because you don't really know what's going to be around the corner. We might have some peace process in Ukraine, Russia, or we can have an escalation where China are going to arm Putin. And then we're going to be quite risk off, and then the dollar is going to perform well, and then this will dump, and it can ignore your ATR metrics, and it can ignore the stop loss clusters, and then it'll be fundamentally driven to the downside. Remember, the geopolitics and the euro is sensitive to anything in Eastern Europe. So definitely a good little tip there. Risk management at all times, and just remember to trade safely. And if you're thinking about having no stop, be really careful. I would have one anyway, just a very wide one. And remember just to have a small size on your account as well. So trade safely, and I'll speak to you guys soon.